Hello everyone, you are the latest market news on March the 31st, 2021. BMW and Big Tech call for deep water money in halt. Google, BMW, Volvo, and Samsung SDI are the first global companies to sign a World Wildlife Fund call for a moratorium on deep-sea mining, WWF said Wednesday. By supporting the call, companies pledged not to mine any minerals on the seafloor, to exclude such minerals from their supply chains, and not to finance deep-sea mining. BMW said that extraction raw materials on the deep-sea floor is currently not an option for the company because there is insufficient scientific data to assess the environmental risks. The moratorium calls for a ban on deep-sea mining until the risks are fully understood and all alternatives have been exhausted. In the meantime, deep-sea mining companies are moving forward with preparatory work and studies in licensed seabed areas. They say seafloor extraction will be more sustainable as it creates less waste and deposit contains higher concentrations of metals than on land. H&M sees losses in first quarter and restores China relations. Sweden's H&M reported December-February losses that were roughly in line with expectations and said Wednesday it would not offer a dividend at its upcoming annual general meeting, but possibly later this year. The world's second-largest fashion retailer reported a pretax loss of 1.39 billion kroner, $159 million in the first fiscal quarter, compared with a profit of $2.50 billion a year earlier. Analysts polled by Refinitiv had forecast an average loss of 1.41 billion crowns. Meanwhile, sales of March, the first month of H&M's second quarter, were up 55% in local currency. On the same day, H&M said its commitment to China remains strong and that is seeking to regain the trust of customers and partners after recent backlash from comments made in 2020 about China's Xinjiang region. Global stock markets fall due to rise in bonds. Global stock markets fell on Wednesday as Treasury yields resumed rising, weighing on sentiment even as Chinese data supported signs of a solid global economic recovery. The broadest index of MSCI stocks in the Asia-Pacific region outside Japan fell from a one-week high. The index was down 1.6% for the month to have its first drop in half a year. Sentiment in Asia remained downward despite data showing that Chinese industrial activity grew at a faster-than-expected pace in March. Along with the country's services sector, European stock markets also opened slightly lower. Recent risk-off sentiment has been driven by higher bond yields. On Wednesday, 10-year Treasury bond yields rose to 1.742%, up from 1.708% on previous day. Analysts at BlackRock said they still like tech stocks. On Tuesday, U.S. stocks were down slightly, with investors selling technology-related stocks after U.S. Treasury yields hit a 14-month high. The Dow Jones fell 0.31%, the S&P 500 lost 0.32%, and the Nasdaq fell 0.11%. Deliveroo shares plummet in shaky LCE listing. Shares in Deliveroo fell in price after its debut on the London Stock Exchange, LSE, as concerns about governance and profitability overshadowed Europe's largest IPO of the year so far. Deliveroo shares were quoted at 305 pence, about 22% below their IPO price. The stock was priced at the lower end of its marketing range at 390 pence after a number of prominent British institutions decided not to subscribe. The recent Supreme Court decision forcing Uber to treat its economy drivers as employees has cast doubt on Deliveroo's own path to profitability, given that it too depends on a legion of low-paid contract riders and drivers. The listing of the London-based company, founded in 2013, is the largest London IPO since Glencore in May 2011 and the largest tech stock offering on the LSE.